All right. We will. Let's do that again. So just to start us off today, we wanted to share with you guys what last week looked like for our office. And I know a lot of realtors and agents are out there kind of putting the pause button on their business. And our office, just agents in our office, got 27 new listings, 8 new contracts pending, and 7 closings. And the reporting is a little delayed, so this is for last week, like Monday to Monday. But 27 new listings is incredible. That's all new business that you have all been working to push forward. So I just wanted to say congratulations to everyone for keeping on working and moving business forward during this time. So these are great. So good work, everyone. And so today we are going to start out just by talking a little bit about the government programs that are in place and for financial assistance, because a lot of those deadlines are today and Monday. And then we will jump in with our guests. We have Kim Wylder on the phone from WFG, and then Noah Blanton. So they will help us talk about how they're going to support us and supporting us in our changing business. So that will be our agenda for the morning. And then we'll have some Q&A and sharing at the end as time allows. So I'm going to turn it over to Dwight and Tanya and Mark Schultz, if you want to chime in as well on the government programs and what our agents need to be doing to take advantage of that money.
I'll start with probably the short form, and that is that there are 2 high priority loan programs available right now for us as businesses and independent contractors. They're available through the Small Business Association. You can go to the SBA website. One is called the EIDL, which is basically an emergency disaster loan. It's worth $10,000. It's a quick loan. It's forgivable. And there are deadlines, and it looks like the deadline for this is today. And they had something like 500,000 applications last week for the first phase. And so these allotments are moving quickly, and they are available for independent contractors. And then there's the second portion of this called the PPL, which is another disaster relief program. It's more designed for payroll. And they are, in theory, allowing up to 2.5 months of payroll that they'll subsidize. And they'll also subsidize some rent and other expenses. So for those of you that are a subchapter S and take payroll for yourself, and maybe you have an assistant that you pay, this loan would be available for you. It is also forgivable under certain conditions, presumably that you pay payroll. I mean, you can't lay anyone off. You have to pay the payroll. And then if you meet these conditions, the loans are forgiven. They're not taxable. So it's basically giveaway money if you can qualify for it. And I've been tracking the PPL. Our company bank is Chase. And so Chase told me that earlier today that the website would be open for applications on Monday. And then 30 minutes ago, he texted me and said, the website is now open. I haven't been able to get into it. And he texted me 10 minutes ago that it's broken. So my guess is it's overwhelmed. And so I think everyone should consider these programs, because if you comply with the terms, they're forgivable. Go ahead.
Go
Mark,
ahead.
Tanya.
Mark, did you want to go next, or you want me to go ahead and pop up slides?
Go ahead, Tanya. I think the slides will help as well. But first of all, what's important is we hope to be getting the video link of this seminar we just sat in on this morning. The video, you will want to watch the video for more of the details. But that said, look at the slides for the quick shot and go out to the website. And if you even think you're going to qualify, just go ahead and apply. Again, the EIDL is a $10,000 forgivable grant. Go ahead and apply today. If it doesn't work, you haven't lost anything. But if it does work, you have supplemental income.
Yeah.
Forgivable meaning you don't have to pay it back. So.
Correct.
Correct. Yeah. So I'm going to go ahead and share my slides that I have here that I grabbed. These are from the call. This is just kind of a brief description of what the economic injury disaster loan is. That's the EIDL. So they broaden it, and it actually covers through the whole year. It's for any business with 500 or fewer employees. It includes sole proprietors, independent contractors, and cooperatives. So even as a solo agent, if you've had a loss of income, you can apply for this loan. Businesses, you must show a hardship relating to the coronavirus. You can get up to $2 million in loans, and the loan eligibility by credit score or alternative methods showing ability to repay this process is monitored on the SB website, and they will waive personal guarantee of loans under $200,000. The grant money is $10,000. So if you want to just apply for the $10,000, you can just apply for the $10,000. They have $10 billion in funding for the $10,000 emergency advances. And I don't know if technically that it's a deadline for today, but they're anticipating that the money will run out before the end of today. So you absolutely want to get on here and apply for this now. We have, I updated the link to this on Wednesday on our Facebook page, and we have moved it to the top of the page. So if you go to our KWPP agent page, the link is right there. And at 11 o'clock at the end of the call, you will receive, if you're still receiving our text messages that we send out, you'll receive a link via that as well. This is an emergency grant. It's forgiven unless they found any fraud in your application. And as Dwight said, it can be used to pay sick leave to your employees. It can cover payroll. It can cover rent, mortgage payments, debt obligations due to loss of revenues, increased costs due to supply chain disruptions. What I did hear on there was that if you have credit cards that you have business expenses that have been paid via that, you can utilize this to pay off that if it was prior to the application date. And then the PPPL, this is the payroll protection plan. And this, the majority of it, 75% of it needs to be paid towards payroll. Then the rest of it can go towards rent, mortgage, interest, utilities. It includes payroll for independent contractors and employees. If you are a new business, you can be considered. And new business meaning you just started this year. It includes sole proprietors and independent contractors. And all of this can, or a portion of it will be forgivable on if your payroll levels are maintained. That means you need to keep your people on and you need to keep paying them in order to have all of it forgiven. If you let anybody go or you reduce their salary amounts, then the 100% of it will not be forgiven. They'll prorate the portion that would be. Oops, sorry. Employees or commission persons making over 100,000 are not included in this. It is intended to cover 8 weeks of payroll. So if you apply for the loan today or on Monday, it will cover an 8-week period after you take out the loan. And then at that time, you're going to contact your bank again and provide them with all of your expenses and everything that you've done. And then they will forgive that 8-week period. There's a chance that it could go longer. It just depends on how long this actually goes on. So that'll be just a wait and see kind of thing. The deadline to apply for the PPL is June 30th. However, this one too, there's, I believe there's a certain amount of funds and they're anticipating it going rather quickly. So you want to jump on the bandwagon as fast as you can. Then there was this slide, PPP or EIDL. it says you can only take out one of the two. However, they were highly recommending that you go for the EIDL first and get that done, because that's a limited amount of funds and it's immediate funds, and that 10,000 is completely forgivable. So if you go for that one first, and then if you apply for the PPPL and you end up with both of them, then they can roll the EIDL into your PPL, and then you can still get it all forgiven, you know, based on if you follow the guidelines and everything. And as you can see on that fourth one down, they're recommending that you move forward with the EIDL and then hope that you get them both. So if you are turned down for it, you're still forgiven for the 10,000. They have that misspelled, EIDL grant. But yeah, that is all the slides that I have. Does anyone have any questions regarding that?
I do. This is Beth.
Hi, Beth.
Is this the, hello, is this the one that we need to go through our local bank to make the application?
There's two of them on here. The first one, the EIDL, is the small business assistance. And that's the disaster one. And that's the link that we have on Facebook and the link that you're going to get at the end of the call. And that one, anyway, just go on there. It's a real quick application. You don't do it through your bank. You just do it on the smallbusinessassociation.gov website. And that one's easy to do. The PPPL is the one that you actually have to go to your bank to apply for.
Oh, okay.
Okay.
Because my banker sent me that application yesterday with the proviso that they do not have any instructions yet about how they're going to proceed. And she was very clear that, you know, go ahead and apply, but they haven't told us how we're going to get the money or distribute the money. So that's why I'm asking about the distinction between the two, because
yeah,
the link that you're providing is the one that's immediate. The other one, they're still kind of sorting out.
Yes.
Correct? Okay.
Yep, exactly. Yep. Any other questions about the PPPL and the EIDL?
I have an update, Tanya.
Yes.
So while you were talking, I had a call back from our manager at Chase for the Market Center. So we do our banking, Chase banking at Chase, our Market Center banking, sorry. He called me back, and this is what he just told me. The website is working again, and they are now taking applications. And because we are a managed client at the Market Center, he is going to manage our Market Center's application, which we are going to submit. He said that Chase will only accept applications for Chase people. So if you have an account with Chase, go to chase.com. And we have actually a rep, and he's going to manage our particular application, which is nice. And so I said, well, what about the other agents in our office that don't use Chase? And he said they're going to have to go to their bank to find out if their bank has been funded through this. Not all banks have. And Chase said they're worried about having enough money for all the applications. And so he said, get your application in as quickly as you can. So I know that they're flying a little bit by the seat of their pants. He told me we're figuring this out as we go. So get your information in. And I asked him what he's looking for. He said, just get it in, get an application in, so you're in the queue. Yeah. And then I'll be probably asking you for more things as I figure out what I'm supposed to ask you for. So this is like, building the plane as you're flying, right? So anyway, I would ask everybody to reach out to their bank. I would assume the larger banks, especially the B of A's, the Chases, the US banks, they're all going to get funded for this and probably be able to take care of people, that do business with them.
Yeah. On the call, they did mention that a lot of the banks are concerned whether or not they'll have funds available for all the applicants that they get, which is why we decided to push this out right away at the beginning of the call to get everyone on top of it and ready to go and have the information you need and go talk to your banks and apply for that SBA. Mark, you said you did it really quick, and it took you like 2 minutes, if that?
I think it took me 8 minutes while I was work sharing between the call. It was really easy. You go right to SBA, well, you go right to the link, and it's easy. I did have to gather information. I did have to know my EIN for my LLC and my S Corp. I did have to know what my gross income was, my gross sales expenses, and just put in those rough numbers. It's easy.
I just did it with Chase just now, but you're not with Chase. You're not making an application. You're simply getting in line. They're calling. You fill out the form, and you fill out their contact information, and then they tell you that you're going to need to have the form filled out and all of your information available when they call you. So then I went to the SBA website and downloaded the borrow applicant to fill out in advance of talking to them. And they also do it online, and don't come to the office. Don't come to their office.
Right. It's all online.
Yeah. Okay, any other questions about those? All right, let's move on, Crane.
Thank you, guys. And if anyone does have questions about that, reach out to Tanya or Mark Schultz. He's our ALC finance chair. So Mark or Tanya can help you with all those questions. And yeah, there is urgency on those for today and Monday. So those should be a top priority, just to, we care about helping protect our agents as well as our admins, staff, everything. So make sure you're taking advantage of those. So next we have our special guests for today, Kim and Noah from WFG. So Kim and Noah, take it away. Thanks for joining us.
Oh, thank you for having us. Noah's on mute, so I guess that means I get to talk here. So we are happy to see your faces. I think everybody's happy to see other people's faces. We're all doing a lot of Zooming these days. So I think one of the first things I wanted to say was I loved that you shared your stats from last week. You're showing that business is still continuing to go forward, and there are deals to be made out there, and people still want to buy and sell property. So that was really great to see that happening. Obviously, there's a lot of closings going on in your escrow offices right now. Most escrow staffs are in their offices. Our gals and guys are there working. They have sales at home, so we are working from our houses as well. But escrow is going full bore right now. It would be a really great deal if it wasn't because of, this coronavirus thing that everybody is so separated. But just know that the escrow officers are working full shifts, and the offices are all locked and closed, so no one gets to go there except for your clients. And when your clients are going to WFG, just know that they couldn't be any safer. They are really doing everything they can to make sure that everybody is feeling very comfortable when they come in to sign, and that it's not something that is going to add extra anxiety for them. So everybody's been really pleasant when they've been coming in, and happy to see other people and do their signings and get their recordings done and then move on into their houses. So we're happy with how that's been going. One of the things that we are doing is a lot of our classes, because people are still always needing their CEs and kind of want to spend some FaceTime with each other. So we're putting a lot of our classes on Zoom. So if we get to a point where we want to have some continuing education, we can certainly do a Zoom class like this, and we have ways to be able to offer the CE for it as well. So we can get some of those going. The biggest topic right now is Zoom bombing. Have you been starting to hear about this? So we are putting together a class on that. Aaron will be able to teach that on just some of the better business practices for Zoom, so that, the bad guys can't now get in and do this and get information that we don't want to be sharing with them. So if we want to do some education on that, we'd be more than happy to set that up and take care of that. Lots of different ways of marketing right now. People are trying to have to get a little more creative and do things maybe a little differently than they had in the past. So if you want to talk about some different ideas on things that you could do, maybe you're feeling a little stuck and you're not quite sure, do I want to do print mail? Do I want to do more Facebook marketing? How do I want to get in front of my people? We'd love to have conversations with you on those as well. We have lots of new tools coming out. The listing packets that we've had, we created one, not quite a year ago, the Home and Community book, where it's a hardbound book that people were taking to leave in their listings, and it had a cost of it of about $14. And it was very nice glossy paper, a real nice leave behind instead of just a binder or such. We've now been able to get that to go digital. So if that's something that you want to do for some other ways of marketing your properties, there's no fee to do that. We can upload a picture of the house and then send you the digital home and community book for you to share with your sellers and other people to look at that as well. So lots of different things that we can offer to kind of keep this going forward on that. But I bet you probably really want to hear from Noah and what he thinks about what this is all happening, what's going on. We were scheduled to have come in at the beginning of last month, and he was going to give his class on what the kind of the state of our situation was, and it kept changing by the minute, so it didn't make any sense to do one there. But I know he has some thoughts that he'd love to share with you right now. Go, Noah.
Yeah, this was, thank you. It's great to be able to get together this way. It's extraordinary. I will say the one thing that's been really amazing is to watch people adapt, our own industry and our clients adapt. And, 2 weeks ago, I had sparingly used Zoom when I had to, and I have never been more comfortable staring at my own self talking on video as I have gotten in the last 2 weeks. It's really amazing how quickly people have adapted. This was, we were supposed to get together a couple weeks ago, and we canceled that class. For 7 years, I've given a quarterly talk on the market. And I had to throw all of my presentations away 3 weeks ago because everything was changing so quickly. So I'll give you a couple updates and some thoughts from our side, sort of some updates on, there's a lot of parts to this. And so think of it as a really, really long train. And as the train stops, each car starts bumping into the next car. And that takes some time for that, to kind of bump all the way back. Sort of visualize that for when this restarts as well. When the train pulls on that first car, it'll be the next one and the one after that. And there will be some other, sort of flow through effect as we absorb how we're going to restart as well. But I'll give you just a couple things that had become really apparent up front, and maybe some things that might cause some issue as we move forward transactionally. So one of the big questions early on and up front was whether we were going to continue to be able to record. There was some worry about that. If there's any lingering worry, we're several weeks into this right now and see no situation in which we would be unable to record transactions. But I would assure you that all of the major underwriters have contingency plans for if we get to a point where we cannot record transactions, we would not be unable to continue to transact business. So there are contingency plans in place there. One of the sort of knock-on effects of this, supply chain issues, you don't really tend to think of those in our business, but our plant, the plant that all of the underwriters in this Tri-County area share is maintained offshore. There's begun to be a fairly significant and growing gap in that plant due to some of the supply chain issues there that could become problematic from a transaction standpoint as we move forward. We do not offshore any of our work at WFG, so we're fortunate in that we are fully able to continue production because we control that here locally. But that could become an issue as we go forward. And then at the county levels, while the recorders are still open, I'll tell you where we've started to sort of see that first train, bang into the locomotive that stopped is on the development, both commercial and residential side of development. We've seen a fairly significant slowdown there where on development projects, we've seen many lenders beginning to pause draws or pause continuing to fund or activating what are called MAC clauses in their trust deeds, which allow them to take a pause for 60 or 90 days and decide whether they're going to rewrite that loan. It's nearly impossible at the moment, even if you did fund a loan, to get a permit out of some of the counties. So think about when we restart as well, if we start sort of thinking forward, There's going to be not only the typical backlog of permitting and construction, but also now that additional backlog that has built up. There could be some pent-up demand there. Any project that had funded but not pulled permits is going to be, I think, at some material risk for being able to be completed going forward. So there's a lot sort of going on at that early stage level in construction, and specifically commercial and retail development, where a lot of the lenders are taking a pause and simply saying, we will not fund up any more money, even if you are mid-project. We're not going to give you any additional money. We're asking you to decommission your project and wait with us for 60 to 90 days. That's hurtful, because a lot of times that means that you're still paying interest for 60 or 90 days, and you either have to fund that out of your interest reserves, or you have to come up with a way to make those payments on a monthly basis. So we're beginning to look forward, and we will certainly, share more and talk about this more going forward. But a long run prediction out of this, depending on whether it's, we're all talking about L and V and U-shaped recoveries, but depending on what recovery looks like, the medium to long term could be an actual significant shortage in housing in the nation in general, but in Portland specifically, as we sort of come out of this and supply chains are extended for a little bit of time. So we'll keep up to date and try to put some of that, structure that so that we know what the impacts of these early delays are that have not quite worked themselves into the market overall. One of the other big things that I think will come out of this, and I think we will get there and it will be quite positive when we do, I expect us to emerge on the other side of this in Oregon with hopefully the ability to completely execute a transaction digitally. Finally, we've been talking about it for years and years and years. I have never seen legislators and industry moving so quickly to try to get to a point where we can remotely notarize documents and where we can really conduct the transaction almost completely digitally, including signing. Now, you may hear a lot right now in Oregon that remote online notaries are available and that they can be conducted in the state, and that is not true. So what happened this week was both Fannie Mae and Freddie Mac both agreed to accept, which is a huge, huge deal. They agreed to accept and buy loans that had been completed through a remote online notarization process. That still does not mean those are legal in the state of Oregon. There's emergency legislation moving through. Hopefully, I think they're going to call a special session, and that should be top of the list, hopefully, for what gets pushed through so that we can begin to conduct a lot more of our transactions remotely. But you will hear some pitter patter and chatter about Ron, and some people will tell you it's okay. All it means is Fannie and Freddie agreed to accept them in the state. And the other thing I would say is, should you ever have any question, all of us are available to you. Zoom us, call us, whatever, and say, hey, I heard this. Is it true? Talk to me about this. I want to understand it. One of the things that I think is critical right now, obviously, is communication between all the people that make these transactions work. And all of us are available to you, including our state council, our title managers, our escrow managers, if you just even want to talk through issues or if your clients have questions. So to the market, I'll re-invoke the freight train sort of metaphor and say that we're on the very, very early stages of this. I'll tell you, I've been surprised to see how strong resale has remained over the last 2 weeks. Our order counts have been fairly stable and consistent. There has been some drop off in percentage, but frankly, not as much as I would have expected. And I've been quite surprised to see the number of listings that continue to come onto the market. Now, nationally, delistings are up 148%, so 6%, 4 to 6%, depending on the market, delisted in the last 2 weeks, removed their homes from the market. I think Portland did a little bit better than that. And new listings also declined about 33% in the same period of time, if we're comparing it to the same period of time last year. So we've begun to see some early signs that will sort of translate down into the local market, begin to percolate up and on the national market. We've also seen median price decline on the national market by about 6%. So some price deceleration. And I've had a lot of folks ask about cancellations. So we close about 1 out of every 5 resale transactions in the metro area, about 20% or so go through. And we are seeing an uptick in cancellations. They are related to coronavirus, but not in super like large percentages. Where we do see an unusually large percentages at the high end. And largely we're seeing that at the moment because the jumbo market for mortgages is a really difficult space to be right now. And so we see the availability of jumbo mortgages going away, or jumbo mortgages at a rate that would make purchasing something desirable for an individual that was otherwise qualified for that. So they're forced into a first and second situation or coming in with more cash. So we've had a higher number of sales that would need to qualify for jumbo mortgages start to fall out at the moment. We're very keenly focused on fallout at the moment, and it's something we'll continue to track, and we're happy to share from our perspective. It's a large swath of the market, and so provide some pretty good data. I know you guys probably have your own as well that you're tracking along. So the other piece I would say is, in that beginning of the freight train, it's tough for us to sort of say what the long-term effect is, but I'll tell you the first of that freight train's unemployment sort of hit last week. Many of you may have seen the initial claims for unemployment in the week before last week in Oregon was 4,900 claims. The reported claims were, I think, 43,000 was the jump from 4,900 to 43,000. The 43,000 was what they could process. The backlog was actually 76,000 in the state of Oregon. So it is likely that unemployment in the state as a whole, and that was concentrated largely in Central Oregon and the Tri-County area, has probably quadrupled in just the last week. That was early on, and we can break those figures down and show you in what categories that was. But of course, we're all waiting and watching and seeing, okay, what is the knock-on effect then of that, and how quickly does it come back? How quickly do those folks get relief? And then early on also trying to absorb, just yesterday, the governor's moratorium on commercial evictions and rent payments, and absorb what that means for the market long term. Short term, it will help. Long term, there are always consequences. We don't get out of these things without having there be a reaction for every action. So just an incredibly dynamic, fast-moving period of time right now. Those are some just early initial thoughts. We'll continue to sort of accumulate data and thoughts and watch the whole market, and obviously be there to share that with you and help you provide perspective to your clients as well. I'd be happy to take questions or comments, or you can't throw a tomato at me because I'm not live, but I'm sure at some point virtual tomatoes will be allowed to be thrown on this medium. But would love to answer any questions that you guys have or hear feedback from you. What can we do better? How can we serve you and your clients better right now? We're open and here to listen to you guys.
No, I have a question for you. This is Dwight Schwab.
Yeah.
Do you have any insight into the best options right now for jumbo loans? I know I was heavily in the jumbo market in 2008, and then we lost, I think, as I recall, all of them by November, December, because the financing completely dried up. Wells Fargo was the first jumbo lender to reemerge. in 2009. And I think they're still loaning. I've got one, and it fell out, and now the mortgage broker is trying to place it, and I think they're going to end up going to Wells Fargo. What are you seeing? You know, we want to make sure that we're streamlining the process. So if Wells Fargo is our best chance, or, you know, Bank America, excuse me, or someone else, I mean, are you hearing or seeing anything?
At the moment, I think the large financial institutions that can choose to portfolio their loans are the best option. Fundamentally, the dry up for jumbo loans is a demand issue, right? Nobody wants them. Nobody's buying them. And so the question right now is, as I've said to my sales staff, the return today is actually the weighted risk return that a buyer is looking at for any asset that they're looking to buy. And right now, a jumbo loan just comes with too hefty a weighted risk of return. So I think this is my personal feeling, and this is just conjecture, so we'll see what happens. But I think largely we will see the jumbo mortgage dry up as we did in 08, 09 again for a period of time. In the short run, I think large financial institutions that can choose to portfolio those loans are the best bet, and they are going to be incredibly picky about who they approve and who they choose to put in their portfolio. Only the best are going to qualify. Only other option then is a conforming first and a second, and then you have to look at the blended cost of that capital and whether that still makes sense to complete the purchase. The only other lever in the long term to pull there to make those properties more affordable is price. And we will see that work itself out in the market over the next weeks and months here. But I think the jumbo markets will expand and contract very similar to what they did in 08. There aren't a lot of good options for jumbo loans right now.
And so for our brokers in the office, the one thing that happened, which I think you just alluded to it, Noah, was that they picked and chose who they went with to make their loans, right? And so I remember conversations where Wells Fargo would say, you know what, you work at Nike, we love Nike, we're going to do that loan. But if you were self-employed in another company, you didn't get the loan. And
yeah.
So, and then Bank America was saying, well, if you want to transfer your assets, your retirement plans, your stock investment portfolio to Merrill Lynch at the time, I think it was Merrill Lynch at the time, then yeah, we'll talk to you about making the loan. So they were sort of looking at these other relationship aspects to judge whether they were going to do the loan. And to your point, at the time, I think a lot of them were being portfolioed. And so if we're trying to decide as a broker who we're going to spend our time with as buyers, it was really, really important that we knew if they could get the loan before we were going to go out and show a bunch of homes. And
yeah,
so,
no, I think that's a critical point. And you're seeing the sort of the ugly little underbelly of the secondary mortgage market, which is I'm willing to make you a loan so long as I can offload that risk to somebody else almost immediately. And what you're seeing is now financial institutions saying, if I'm going to commit my capital to you long term and we're going to be in business together, I'm going to be one hell of a lot more picky about who I accept, because I can't transfer that risk now and offload it to somebody else. So one of the hard parts there, Dwight, is knowing, sort of who they're going to lend to, what that profile is. And I think you're absolutely right about making sure that those clients that are looking for jumbo, that they can actually complete the transaction, that they can actually execute all the way through. Some of that's going to be kind of feeling out who has an appetite for what type of buyer. Now, this is a little bit different in that many financial institutions, or the large ones, may perceive that this is not a recession that's going to be centered around real estate or real estate finance. They may be judging, well, how quickly do we think we're going to recover? So how long are we going to continue to make jumbo loans? And it may become very specific to industry. You're right. Somebody in healthcare may very well get a jumbo loan where somebody in construction may not.
Yeah. And so I would just, and I'll be quiet after this. I don't want to dominate the call, but I know this is going to come up for our brokers that are working in the jumbo end, which our average sale price in February was 500,000. So, we're heavily in the jumbo market in our market center. So one of the things that came up as we went further into this was we started to see more layers of underwriting. And so, for example, we have a partner in the market center, Academy Mortgage, and Academy Mortgage is going to stay in business by finding the lenders that actually take these loans, right?
Yeah.
And so what happened was our buyers had to go through, the underwriter for Academy, who was charged with putting the portfolio together in a way that the buyers would, hope that it was a smooth transaction. Then they would send it to the next underwriter, which would be, let's say, Wells Fargo. And then Wells Fargo would add their own stamp to it and their own additional requests, right? Then we started to see the investors that Wells Fargo intended to offload these to have a third underwriter. And so I had deals that I lost because my clients said, this is the craziest process I've ever seen. How many underwriters do we actually have to go through to get this loan? And so, I mean, what are your thoughts on that? I know you saw this.
Well, it's interesting. And so for those of us that were in business during that period of time, it was unprecedented to have the actual investor engaged and involved in underwriting, and it was routine. We had it a lot. Maybe we will get back to that point. That could be true. And so the impact there is then obviously on sellers as well. How do they choose to accept an offer? How confident are they that offer is ultimately going to close? How are you sure when you've gone through all the layers of underwriting? What we do know is we have a lot more knowledge about what this sort of looks like from the last period of time, and a lot of us are still around and relatively sane from that period of time. And so it's we will, I think, react a lot quicker and ask the questions that you are right now. Our instinct will be a lot better for how we get these transactions done. And I think that no matter what the market presents us, what I would encourage and say is whoever adapts the quickest to it and can frame and contextualize that market the best for their buyers and sellers wins. We're still going to transact real estate, no matter what. It is going to happen, and perhaps quite a bit of it. The question is, where's the opportunity in the market for those people that are looking to invest in the market? And then also, how do you best advise in a changing environment, to your point, buyers and sellers on how they should act? And what we didn't learn to do until a little while was ask questions like you just brought up, which was how many layers of underwriting does this have to go through? And ultimately, if you're selling it, is the investor also going to take a third look at it and underwrite it? And if you think it's hard to talk to an underwriter at the first layer, wait till it's an investor underwriter. And those people are like unicorns. They're magic. We don't even know where they are or if they're real.
You can't talk to them.
Yeah. Somebody can, but we can't. So those are all relevant points. And I'll tell you, and this is hard to hear, but in the jumbo market, the only other lever to pull is price. And so sellers are going to have to make decisions about whether a market meets their expectation or not. And nationally, I think that's why we see delisting go up so much, because either for health reasons or market reasons or absorption reasons, we see sellers saying, hey, this market doesn't meet my demand. The best thing we can do is get buyers and sellers out of a market if it doesn't meet their goals and their criteria. Only people that this market can meet their goals and criteria should be engaging in it and interacting with it at the moment. And for you, partially, it's going to be making sure that you're qualifying those people through to say, does this meet your goal? If you think about the last market cycle, and that's why I say whoever adapts the fastest wins, we transacted a lot of real estate in the last market cycle. But if you were a new construction specialist and you doggedly tried to stay with that through the last cycle, it was tough. If you were a new construction specialist who adapted to REO and short sale, you did great. Some people had their very best years during that period of time because they were able to adapt and go to where the market was presenting opportunities and transactions. And I'm not suggesting that you need to become an REO or short sale specialist, but we do need to look for where those pockets of opportunity are and for who and whom this market really is one that they should be engaging in. And this is all an opinion piece. You can also just tell me to stuff it, and I will, if that's what you want.
Thank you. Those are all great points.
Yeah, you bet. And we'll begin to aggregate some data as well and be able to put that out. We have some tools already that I've not been in and spoke with your office, but some tools that sort of also help people visualize what the market feels like to buyers and sellers. Those are relevant, I think, right now. So I think that that's going to be important as well. What does the market feel like? And real quick, I think you're going to see interest rates go up over the next 30 to 60 days, perhaps significantly, and then I think you're going to see them fall again, and maybe fall to new lows after they've gone up for a little bit of time. The mortgage markets are in an extreme amount of turmoil at the moment, and they are acting and behaving contrary to ways that we would expect. When you have the 10-year treasury going down and the 30-year mortgage rate going up, you are in a very interesting period of time where sort of norms have kind of gone out the door. We have to work that out, and it is working itself out to where those things are then moving in parallel again. But candidly, if we were functioning in a market that was more normalized, interest rates should be closer to the mid 2% range if they were tracking with 10-year treasuries. So very, very interesting period of time. And the mortgage markets are in a tremendous amount of fluctuation. We should be thankful and slightly afraid that monetary and fiscal policy have moved so quickly. Happily, they've moved quickly, and I think that's good. There was no pause. It was very, very decisive and quick. That's good. We still have to work through the reasons why they moved so quickly. And the mortgage markets are stabilizing, but they're going to stabilize at higher rates for a period of time. They have to, and then I think they'll ratchet down again, and again maybe test new lows.
Great. Any other questions? Do you have time, Noah, for any other questions?
Absolutely, you bet. I'm not allowed to see anybody, so I will sit here with you guys all day.
No, well, I just want to let you know everybody got off the call 10 minutes ago, so you just been talking to me.
Joke's on me. Yeah.
Noah?
Yeah.
I don't want you to stuff it, on the contrary. And I just wondered if you could tell us, what's the best sort of channel for accessing the data and analysis that you guys provide?
Keep in contact with Kim and feel free to also call or email me directly or hop on a call like this. I haven't talked a lot in the last 3 weeks just because I felt early on it was irresponsible to talk because we literally didn't know what was happening. Now that we've got some orders in place, now that we begin to sort of be able to see what's happening, we got our first round of unemployment that came through. We know who those people are that are unemployed. We're beginning to see the market react and mortgage markets react. We can start to put a little bit of a picture together. So stay in touch with us, and we will continue to provide that information.
Thanks.
Thank you so much, Noah. This was great information.
Yeah, you bet.
And especially a lot of the information regarding jumbo loans, because that's going to be so relevant to a lot of our clients with buyers and sellers, and thinking about what those conversations are going to look like ahead of time to make sure you have the right expectations. So yes, Noah, that was all wonderful information. And Kim, thank you so much for bringing Noah on and coming. And then also we have a few guest agents on our call today. So I just want to thank you guys for joining us as well. And now we'll, just to wrap it up, we'll kind of open up the floor to if anyone has any challenges from the week or things that they want to kind of round table off everyone else. Terry asked if anyone has an Airbnb or a short-term rental for about a month because they have a closing and one of her sellers needs somewhere to go. Terry, is that because something got delayed or went wrong with one side of the deal?
No, we have like 4 houses that are closing, and some of them are doing simultaneous closings. And the last person, or the first person that needs to move, is a seller, and because her house isn't closing till June, and everybody else is closing 4/29/51, and she cannot get an Airbnb right now. She cannot find a hotel to move into. So if we can't convince the buyer at the very beginning to extend closing or extend possession, then this whole thing could fall apart with 4 transactions. So we're trying desperately to find a way that we can get them to do that and or find a place for her to go. And her agent is working hard trying to find an Airbnb or a hotel, but they're just not out there right now.
Okay, great. So if anyone has that, call Terry, let her know. Denise has something. So Denise connected with Terry. Terry, you can kind of read that message. And Tracy Chapman might know someone. And Beth asked, what is their particular area, Terry?
Well, right now the seller lives in Canby, and I'm not sure where she's buying new construction, so I'm not sure where that is at, but I'm going to say the Portland area.
Okay, great. Thank you so much.
Anything you guys can help to keep this together, that would be wonderful. So.
Yeah, it sounds like there's a couple leads already. So
okay, thank you.
And then Mike, you sent out an email to everyone earlier this morning, just clarifying something on one of the forms. Do you just want to speak to that real quick?
OREF 096 form. And it was some of the in line 21 and 22. It was just a clarification of when they wrote it, they probably wrote a little excess in legalese and less English. So I wanted to get a translation and get it out to you. So as you're working with clients, you could explain it. And it's just a question. The issue really is just a question of how you're, going to do contingencies and waiving of contingencies and how that affects in the issue of COVID-19 and what that means to it. But the email is pretty self-explanatory. It's difficult to explain in English, but that's why I gave you some exact verbiage when I sent it out, so that you were up to date, had a good feel for it, and could explain it, because obviously all these types of forms are always new to both ourselves and to the clients. So
great, thank you. So make sure to check out that email. And then anyone else want to share anything that happened this week with buyers, sellers, things you're observing that might be beneficial to everyone else, especially maybe with jumbo loans or deals that are having issues, maybe other people can learn from them?
I'll put a reminder out there just to agents that if you're showing with buyers, first thing you want to do is check the RMLS instructions on showings. I had another agent, and in fact, a Keller Williams agent, show up at one of my listings yesterday and said, "Hey, can we take a look at this?" And I said, "Great. What have you seen and signed the showing protocol document?" And, "Oh, well, no, we're standing in front of the listing." And I thought of all times that you need to make sure you reach out to the listing agent and at least see if there's instructions. Now of all times would be the best. It's just a great reminder for something that should be simple, but just always check the showing instructions.
Great tip. Yeah, because a lot of them have really specific details right now, like your own. So that's a great tip. I think you can't really go wrong with over communicating right now with buyers, sellers, the expectations. So good tip, Mark. Anyone else have anything before we leave everyone?
I do.
Please, go ahead.
Hi, everyone. For those of you who I haven't met yet, my name is Carrie Kapp, and I have been attending some trainings for several months. I just completed my coursework in time for the test center to get shut down. So I'm awaiting for that to open up. But in the meantime, I wanted to share with folks, I've also pursued my notary public, and I have that certificate. My stamp and journal, according to UPS tracking, should be here by next Thursday. So I wanted to offer up my services for anyone who might need some mobile notary publics during this crazy time for closing or other notary issues. I was going through some of my construction totes for cleaning up, just organizing on this block of time that we all have, trying to figure out good ways of using it. And I discovered some N95 masks from some of my previous construction projects in my house. I have just about a half dozen left, but I wanted to let folks know that if they need notary public services starting next Friday, I could be available. I've got the masks, I've got gloves, and I've got sanitation products to bring with me. And I would like to ask Noah if he could keep us posted on when they do, or if and when they do make a protocol in Oregon for doing mobile notaries, if he could let us all know, that would be great too, to keep on that circle. So just want to throw that out there for everyone, and I hope everyone's staying safe and healthy.
We absolutely will let you know, Carrie. And if you would reach out to Kim and see if we can get you on an approved and vetted list for WFG. We have a tremendous need for mobile notaries right now. So would love to partner up with you on that.
Wonderful. Thank you so much.
Wonderful. That's great, Carrie. Thank you again, Noah. That was wonderful information. Oh, Emily's also a notary. She shared too. So this was great information. Really helps us all get a better grasp of what's going on out there. And Monday it might be different. So Noah, we'll have to have you back again soon if you would join us again. But thank you again. And thanks everyone. Have a wonderful weekend. And then we will see you on Monday.
Thank you for having us.
Thank you guys so much. Thank you.
Bye.
Appreciate it so much. Congratulations, Carrie.
Go sign up for the SBA loan now.
Yes.
Thanks,
Now.
Mark.